Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776. It is me, Mr. Curve. Hope you guys are having a wonderful March 26, 2023 Sunday here. We're gearing up for this week of trading. This is huge. It's pivotal. We had the Fed interest rate decision last week for Fed Day. We got a lot of key things from that. We got a 25 basis point rate hike. We had further liquidity being provided via credit default swap lines, as well as the discount window and certain other banking facilities. So liquidity is on its way. We had the video last week talking about stealth QE inbound. That's going to be pivotal as well. If you guys are new to the channel, we talk about everything from economic data, monetary policy, politics, and market and trading strategies. This is the home page here, guys. Please join my Patreon for the $5 group as well as the $25 group. It does list different things there that you guys can get involved with. Also, sign up for, get yourselves in the game for Robinhood as well as Webull, as well as eToro and FX Choice for contract for differences. Remember, talk to a licensed professional, and this is for entertainment purposes only. As you guys can see here, please watch each and every one of my videos. Big thumbs up to my 4.9K subs, almost crossing that 5K threshold. Appreciate every single one of you guys. Please like, comment, share, subscribe, tell your friends, and also watch my featured channels down here as well. So let's get to the money and let's get to the markets. So we're going to lay out this week. A lot of economic data is going to come out. We have Governor Bailey speaking on Monday, March 27th. And then scroll down here. Governor Bailey is going to speak again, roughly about a little bit over 12 hours from that point. And then for the U.S., we're going to have the consumer confidence coming out, looking like a reading of 101 on the dot there. It's going to be pretty big. It's going to probably be worse than that, which would probably be dovish for the dollar. So we'll probably see that rise. We're also going to have the Richmond Manufacturing Index drop. We're also going to have Australia's year-over-year CPI numbers that's going to drop, as well as a litany of other different things for the UK dropping. We're going to have pending home sales looking like a negative reading probably for the first time in a while here since December. So we're going to definitely check that out as well and see how that looks. Crude oil inventories, we're going to see what is that going to move the needle for WTI, Brent, as well as the gas price there. We got the German preliminary CPI month over month. That's going to be huge as well too for the Eurozone, just to see are they slowing down, because at one point they were negative. If you guys look over here, they're 3.5 as far as interest rate. So we are definitely in a very restrictive stance here. Scroll down here, we're going to have that quarter over quarter GDP number. Again, this is a nominal number, quarter over quarter, looking like we're going to be at a 2.7, which means if it stays the same, guys, you know my philosophy is most likely going down, so we'll probably get a softer reading on that as well. Scroll down here, guys. We got Secretary Yellen is going to speak as well. It's going to be pivotal, might move the markets as well there. She's definitely coming into focus. She used to be the Federal Reserve chairwoman at that point in time. We'll scroll down here. China is going to move the markets in the Asian session for Thursday for sure, with these manufacturing, non-manufacturing PMI numbers. So we're going to scroll down here, guys. A lot of stuff coming out of Europe for sure, as well as the UK. ECB President Lagarde is going to speak as well. That's tentative, so we don't know exactly when that's going to occur. And then we're going to get the Canadian GDP month over month number. I am expecting soft readings for all of these actual nominal price point numbers. Also the core PCE price index is well going to come out, and that's so personally I'm expecting soft numbers from this as well. Hence why the forward guidance was a little bit more dovish than a lot of people anticipated, especially from a 2-week period from where we just had last week prior to hearing Chair Powellman's statements before. So we're definitely getting a very dovish tone going forward. Here's the conundrum though. As we're getting those dovish sentiment, we're probably going to see the dollar strengthen quite a lot. You wouldn't think so, because you would think obviously we're going to see an influx of cash, but it will be stealth QE still, guys. They still will have that strong monetary stance up front, and then we're going to see deflationary factors with not enough money being spent. So overall, we're going to see probably a stronger dollar, at least in the short term here. We also got the Chicago PMI. That's looking like a negative, a 43.6 reading, and that's going to be huge too. So Typically, they do want to see it above 50 to be expansionary. Under that would be contraction. We're also going to see revised University of Michigan consumer sentiment. They really focus more on the preliminary because it's a bigger number, and then we get a medium indicator there. Also, we will shift forward from our daylight savings time here in North America already happened, and then we're going to shift the clocks back for the Australian as well as New Zealand as well too, to catch everybody up to speed on the server time for our trading, and that will put things more in sync of what it's supposed to be like, because sometimes you can have choppy intermittent trading during that. So that is the economic week forecast for everything that's going to be laid out. I gave you my take on it. I definitely think the dollar is going to have another strong week here just due to Powell's remarks, Yellen's remarks, as well as a stealth QE going on, because they're not outright saying that they're going to increase the balance sheet. Actually, the balance sheet only rose up, I think, about 95 billion over that Thursday reading from the week over week. So that was a lot more hawkish than had anticipated. A lot of people thought there was going to be 500, maybe $1 trillion on top of what we had already anticipated, just due with liquefying the banks, but that did not occur. Again, they do have those different asset lending facilities that are open, and truth be told, it's just exchanging $1 for the other. The dollars were spent drawing them out of the markets with those short-term treasuries or the long-term treasuries. Even though they're discounted, the Fed is still honoring those coupons at full value. So obviously they're still getting liquefied. And again, guys, they are getting liquefied to maintain their cash flow state right now. I don't believe they're going to be investing in capital expenditures, human resource. I don't think they're going to be investing in any of that. I think they're just going to have the capital to continue to do day-to-day operations, withdrawals, slight loans. A lot of people that I heard are not getting approved for certain different loans, even though they meet that criteria. So we are definitely in a very restrictive stance. And vis-a-vis the 08 scenario, we're probably going to see a very deflationary factor before we see that uptick. Again, guys, this is just my thoughts. Definitely talk to a licensed professional about your specific portfolio. But let's get you guys now over to the most liquid pair in Forex, Euro/US dollar. Let's see what I think is going to occur this week. So right now in the Asian session tonight, guys, we are seeing a seesaw effect for the Euro/US dollar, kind of trading in a 10-15 pip range. Typically, the Asian session does not have a lot of volatility or liquidity, so we tend to get those lower price spikes, swings both ways here. As you guys can see here, over here, the article, inflation fear set to upend swap traders betting on RBA. The Reserve Bank of Australia pause. So the market is definitely split here. A lot of people think they're going to increase rates. A lot of people think they're not going to. The dot plot last week basically is saying that they're still going to raise rates, but at a slower pace, and it'll still be determined to be seen in the future what does actually occur. We'll go out on a 1 hour chart on the Euro/US dollar. Again, guys, if you're looking at for last week here, we did actually have a big run up there. But again, guys, I'm definitely expecting a decent pullback here, because at some point it will be painstakingly clear, despite obviously the Fed's intervention, but it'll definitely happen where we're going to see very deflationary factors if they keep this stance. And right now the markets could think all that they want, but at the end of the day, whatever the Fed says goes. Remember the saying, guys, do not fight the Fed. So as you guys can see here, we're already starting to see that pullback. It was expressed on Friday's trading with that stronger dollar. A lot of people thought it was comments from Yellen and different people, but I think it's coming to the realization after a couple of days has settled that this is serious and that they're going to keep interest rates elevated while they're maintaining their accommodative stance on the back end, stealth QE. So for the week, guys, I'm definitely seeing this guy, Euro/US dollar, maybe pushing down to the 105 level, possibly getting as high as maybe the 110 level due to certain things coming out maybe worse than expected, because we might see a big push up there with the day-to-day trading on that. So again, I'm looking at a target of 105. Maybe some numbers do come out better than expected. Maybe a lot of traders pile into that. But overall, I'm seeing we could also have it the other way, weaker data. So either better than expected data will keep the hikes, definitely occurring, or we start to see soft numbers and we start to see that the Fed will possibly pull back with some of the comments that they're going to be hinting on throughout the next month or so before they get to the May's meeting. So we'll definitely check it out, guys. I'm looking at that 105 area, probably a top level about 110 if we do get that. Again, guys, we can have a seesaw effect. It was very volatile last week. We kind of ended flat from where we started the week at about the 107 mark. We shot drop to 108. Again, it will be range bound for sure, but we'll see how it plays out. I'm thinking we're going to get to that 105 though if we have some good numbers to come out, as well as a deflationary stance and also hawkish comments. Let's get you guys now over to the most liquid commodity there, gold, AUX/US dollar. So just go ahead and hint on this article here. ECB warns that shadow banking could trigger next financial crisis. Obviously, that is a looming factor. The drop of liquidity is a looming factor. But again, guys, this might be the first time where maybe they don't go from an emergency meeting down to 25 basis points or, lower bound 0%. Maybe they keep rates elevated and they only liquefy the entities that they have to. Because again, guys, just because the banks get liquefied does not mean that that money will be in circulation vis-a-vis M1, M2, M3. There's a high probability that a lot of people whose capital is at risk will probably stay there as long as they get that guaranteed FDIC/Fed/Treasury guarantee. So we'll definitely have to see how that plays out for sure. Let's go ahead and check it out here, guys. Let's see the gold US dollar. What I think probably is going to be happening. We had that $2,000 test there. I don't think we're going to be able to get over that hurdle unless some type of other black swan event happens, just because that is a pivotal moment there, getting over that 2,000 plus. Another thing you got to consider is central banks may come in and intervene and push that price down with heavy selling on that asset, so you have to be mindful of that as well. So we'll go ahead and check it out here. Basically last week it was not overall gold's week, to say the least, despite the dovish tone of how last week occurred. We basically were at the 1975 level to really start the trading week last week, and we basically are still there. We're pushing down a little bit though. We reached that psychological 2000 level, but then we're starting to push down. This could definitely be a run up for an uptick, but I'm definitely thinking we're probably going to push back towards that 1900 handle. Again, guys, if we get that better economic data, that is what probably will occur there. Again, if we get that softer readings, I still think, because I have seen this happen before vis-a-vis 08, 09, I have seen it occur where we got those softer numbers and we still had a deflationary trading style. So we could see that happen again. It is pivotal, and it is something you want to consider, because just because you see bad numbers doesn't mean that the Fed will immediately pivot. Again, they are saying that they're economic data dependent, which means that they may need to see a long period of that. And also, their two main mandates are employment activity or employment numbers, as well as liquidity, price stability. So they want to make sure that maximum employment and price stability. They've already told us that they chosen price stability, so that means that maximum employment they don't care about. And actually at this point, they want to see the turnover in the job market. They want to see those numbers rising. Hence why on the economic data calendar here, we have seen that indicator went from a medium to a high, because they do want to see the tide turn. They want to see the layoffs. They want to see the deflationary stance. So I definitely think we're going to push probably towards that 1900 handle, a little bit pull back there, because we had a huge run up, guys. I mean, you look at the beginning of the month here, we really shot up. We really shot up about 10-15% for sure. So a nice pullback is healthy. As everybody is piling in, that's typically when the markets will go the other way, and that's typically when some people will lose there. So as you guys know, I'll keep you guys up to speed with this as it develops. As those comments come out from different government officials, we will be on there. Look at this here. Fez Kashkari says main strains bring a risk of recession closer. Absolutely. Again, guys, that is a deflationary environment, unless obviously they turn the spigots on and we go to QE to infinity. But I don't think that's going to happen this time. I think the cat is out of the bag for that. Let's get you guys now over to the energies market. There's a few things I want to talk about there. WTI is increasingly getting crushed here, guys. As you guys can see here, I am very dovish on WTI overall. I'm thinking that we're probably going to get more towards that 60 handle at some point. I definitely think that's going to happen. I know that the strategic oil reserves were not replenished as anticipated, because a lot of bulls were anticipating that. That definitely knocked it down a lot last trading day here. As you guys can see here, we kind of had a little bit of a run up there, but it definitely sold off and then we kind of stayed there. That stronger dollar weighed on WTI, you know, as far as the actual forex, as well as the dollar index and stocks in general. The stocks weighed on WTI as well. That sentiment alone could ruin WTI, because WTI is very volatile. It's a very volatile instrument to trade as well as be a part of in the futures contracts and stuff. So you really have to be mindful of the direction that this can go in. As you guys can see here, even tonight here, we're already having that pullback. We got up to that 69.60 handle. We're pulling back again. I think we're probably going to nosedive more to the 65.60 at a first level support level, maybe 55 at a second support level, but I'm definitely thinking we're going to pull back here because the trend is very strong for this pullback. And I'll go out on a 1 hour chart so you guys can kind of see we're kind of plateauing here. Had that run up, had that little bit of a run up. We were high at that 75, and then we're definitely pushing down. If I were to just show you a 4 hour chart here from that March 6th, we are pushing down. And I definitely think, like I told you guys, with the sentiment being a more deflationary stance, especially given the rhetoric that we heard last week, I'm definitely thinking we're pushing more towards that 55 second support level. But again, guys, that is my opinion. Make sure you talk to your licensed professional and do your due diligence. Let's go ahead and check out the crypto market. A lot of people love that. I still have people messaging me saying that they're getting into certain instruments there as well too. They believe that that is a hedge as well. Let's check it out and let's see what's going on. BTC dollar, the most held entity for this type of trading here. We definitely had Bitcoin still pushing up a little bit. It actually is more resilient than I anticipated. I definitely think that a sell-off was going to occur with that hawkish sentiment last week. But, you know, we definitely had that push up there. As you guys can see here, we did have a little bit of a sell-off there. And then we're kind of pushing up there, guys. So maybe Bitcoin is more tied to, maybe the cryptos is really more tied to what these comments are going to be saying as opposed to what the policy stance will most likely ultimately be. Again, guys, this is an influx of capital now visa, due to the banking situation. So maybe that is the run up itself, not so much that maybe this is a safe haven or a flight to safety type of situation with these cryptos. I don't believe they're a story of it. I do think they're very speculative in nature, and I definitely think that you have to do your homework on these guys. Have I traded and made a few dollars with these guys? Absolutely. They do trade 24/7, so sometime on the weekend I do partake in them as well. But again, guys, they are the newest trading asset that's around. That's a big ticket thing, so you have to be mindful. Let's go out on a 4 hour chart on Bitcoin here to the US dollar, and we're still holding steady here. But you guys know my philosophy: if it stays sideways for too long, maybe a catalyst will push that guy down towards that 24 handle, because we did see that uptick ever since the beginning of the month at about the 20 to 22 handle. So maybe we'll see a pushback down to maybe the 25 24 handle. Again, we might see that break that 30,000 again, and that'll be kind of almost half of what it was a little bit over a year ago. So maybe we'll get that to push up here. Here it is right here. Bank failures and crypto collapse, Bitcoin emergence as North Star. It's very well possible. A lot of people are running to that, and that maybe they view that now today as a flight to safety, just due to the fact that it is something that is a finite amount versus the US dollar, which is an infinite amount. Let's go ahead and get you guys now over to the dollar index. And again, the dollar index reads everything that you need to know when you're in these markets. Let's check it out. Dollar index tonight is inconsistent. As you guys can see here, it's a little bit up, it's a little bit down. If we go out on a week here, we've seen it slid slightly. I definitely thought, a lot of people thought it would probably touch that 102, the 100 level here, but it kind of got to that 102 level. But again, guys, I'm definitely believing that this is the calm before the storm. It's going to shoot up either way. A lot of people are pushing it down overall collectively between these assets, but I definitely think it's going to have its day. I think it's probably going to shoot up unless an emergency meeting happens. We're dropping rates. They are effectively adding too much money to the balance sheet week over week. But overall, I definitely think that this is going to probably push up. Let's check a 6 month. 6 month that had that continuous slide down. Again, I'm a little bit more hawkish on the dollar index compared to a lot of people. A lot of people are piled into a softer reading. Again, if we have a bank collapse and they don't come to the rescue, that is that's deflationary, because that means those dollars, regardless if they were righteously lost or not, meant that they're not going to be in circulation. Hence means deflationary. Again, guys, that's how I tie everything. I tie it to, are more dollars in circulation? Maybe. Are they removed from circulation? That's deflationary. Influx, inflationary. Decrease, deflationary. So that's how I look at things, guys, and that does trickle over to the assets that we are involved in, guys. All right, let's get you guys now over to the stock market. I want to tell you a few things there. So this contagion situation, it's a big thing. Make sure you're putting that forefront in your investment as well as trading style, because you have to be mindful of the capital that you're investing. The best trade sometimes is not making the trade at all. Preservation of capital should be paramount in you guys' strategy, period. Whether that's your 401k that's automatic, whether that's your IRA, whether that's money on your mattress, whether it's you in the markets, whatever. It is pivotal that preservation of capital is always paramount, number one. So especially with this situation looming between the ECB, Credit Suisse, the US here, Deutsche Bank, all of these different possible black swans, the situation over in Europe as well as that unfolding. Make sure you're mindful here. Make sure you're getting in using the 4 pillars of the trade. You know what you're trading, when you're getting in, when you're getting out, and how long are you holding it. That last part is pivotal right now. How long are you going to hold it? Sometimes people are going to hold it shorter than they anticipated or longer. Make sure you have a concrete deadline for that. You say 2 days, it's 2 days. A week, it's a week. Those things are paramount, guys. Make sure you guys like, comment, share, subscribe. Again, that is my take for this week. If you're in these markets, definitely put a ticker down there, and also sign up for my subscription service for the page, guys. It's just $5 a month. You can put your tickers in there. I'll do some research on them. Maybe I'll show them on the videos here. Maybe we'll talk about them a little bit, their PE ratios, their balance sheets, whatever you guys would like to see here, and I'll give you guys my take on it as well. And again, guys, I will be viewing those comments. Make sure you comment, make sure you like the page, and make sure you hit that bell notification for the latest video. And as always, in order to be profitable, one must have the knowledge and insight about the next trader position to. You guys already know. Stay ahead of the curve, guys. I appreciate you guys joining me here. Make sure you like, comment, share, subscribe. I'll see you guys in the next video, and happy trading.